You are about to find out the key levels for FuboTV ticker Fubo. So, surprising actually, they did hold up quite well on earnings. Obviously, right now we're up about just under 9%, which is quite impressive considering where we were. We were relatively overbought on Fubo. So yeah, being able to sustain this move and even go to the upside was quite unlikely, but it just showed the strength that Fubo does potentially currently have. So what are the key levels? So from the intraday perspective, obviously we're looking at day trading today. As long as we're able to basically hold this anchored VWAP, we could be quite bullish on the day. And then if we do see a move to the upside, we have a 378 target. If we end up breaking this range of kind of the anchored VWAP to that 342 deviation, we then have a support at 315. But to cover the overall and kind of key levels, we'll quickly cover the supports first. Obviously, we noted today the 342, 315. If we break that, it's actually quite a while till we get to our next level. And then that's going to be 250, 237, which are our first deviations between the 6 month and the 1 year. Also, right around that same range, you can see at 257, we have an anchored VWAP. What is this anchored VWAP from? It's from June 1st. It's a quarterly anchored VWAP, so can be quite strong. And if we did break all three of those levels as well, we do also have a support at $2, basically dead on, which is our 1 year anchored VWAP. This goes from January 1st. So again, quite a few supports if we do continue to the downside, because we are still considered quite overbought. But we are holding this upside move quite well. So if we do push to the upside, what are we paying attention to? So we did gap and actually hit into our third deviation. And if you check out the Fubo video we did before this, we did talk about this. Whenever we're looking at these kind of stocks, the best levels to always be trading are going to be these third deviations, because it's very rare for a stock to break above and hold this level. And again, that's just because if you understand standard deviations, you know that 99.7% of data should trade within its third deviation. So, you know, it's very rare that you kind of trade above this level. And if so, it's most likely going to be short-lived. So when we opened today, it's why I actually day traded it short, because again, I knew most likely at a minimum we would get a pullback. If not, this could be that overall reversal. But if this is just a temporary pullback and we retest this level, again, the retest is always more likely to break. So then I could definitely see us going higher, break that $4 mark. And then I'm targeting about $4.50, which would be our third deviation from the 1 year time frame. And if we can hit this, this is where I turn a super short bias. I will be looking to trade this short bias. And I'll be doing that through options. And the reason I say that is it is easy to borrow, so we can trade the shares, but it means I'll probably do covered stock, which means shorting the shares, buying the calls. And the reason I say that is a stock like this, again, most likely not going to hold a move over 450. So I want to trade that short bias. But again, in these kind of stocks, if they do for any reason hold, or there's any sort of a short squeeze, we don't want to be holding that naked, and we definitely don't want unlimited risk to the upside, because that is just so much risk for no reason. So again, we can buy the calls, usually quite cheap premiums, and again, we can define that risk, so we can play the downside. But if for any reason we are wrong, again, we are hedged, because again, you're never going to be right 100% of the time. We want to be defined. So that's how I'm looking at trading it. The key levels we've gone through, and then I'm looking to play it to the downside, really from this even 380 or above, or the 450. Looking to trade that short bias, probably shorting the shares, buying the calls to define that risk. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.